Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. It is Friday, end of the week, and a shakeout day it was. Yesterday was a good example of a shakeout day. We're going to talk about what kind of that means and what it looks like, and really go over some levels that went through entry but didn't trigger entry, and we'll talk about that and more today on the Daily Market Commentary. For those of you new to the channel, hit that notification bell, click that subscribe button so that you get the updates as we send out new trades. We look at the same 10 to 12 futures markets every day, and the key is that we draw lines on the charts and we leave them. We don't take lines off the charts. It holds me accountable, it holds you accountable, and it shows you how trades develop and change over time. So let's go ahead and get rolling. So the S&P this morning, we're up 11. Had a really strong run over the last couple of days where I wasn't sure if we were going to be able to get up to some of these levels. Now notice we had two levels up above that were confirmation entries, meaning we wanted price to come into the level and then we get short when it comes out of the level. Well, on both occurrences, if you notice, we went through the levels before triggering. So on the ES one yesterday, this was a level that we talked about in the live trading room yesterday. We came close to the trigger, didn't get the order triggered, and then it popped up through the level. I really actually was when I was watching this one, I saw it hit this area and I did not get in, and I was lamenting the fact that I picked a confirmation entry because I thought, oh man, it's gonna go away. I'm gonna miss the opportunity. I'm starting to get annoyed. Should I chase it? Didn't chase because it's not in the rules, right? The rules tell me on a confirmation style entry. Now I picked confirmation style entry because my big picture was telling me to be a buyer. My big picture was telling me it's time to be a buyer, so any sell trade is lower probability. So this order didn't get triggered, didn't trigger in a way that would get the order filled. If I go down, even all the way down to say 5 minute on this one, you can see that we blew right through this one. So this here would have triggered the order, but if it goes to where your stop loss would be before coming out of the trade, then it cancels the order. So on the ES, both levels that were above in supply went right through. So now we've actually set up a little bit of a breakout in the last few moments. We've just broken above some, a little bit of a decent resistance point, and we're coming back, giving a nice little retest of that level and starting to get a little bit of a rally off of that move. So it does set up for a pretty decent little reversal right now. If you missed it, we may get another bite at the apple a little bit lower than where we are today. Now, above us, what do we have? Well, notice I don't have any 1 hour, supply or resistance up above us for a while. Matter of fact, I just have this one way up here. Now, remember, my big picture is telling me to be a buyer. So anything that I take that is to the downside is slightly lower probability. And so now we're back to kind of looking for breakouts to the upside. Now, when I go off to the daily chart, we are coming into this daily area of resistance and daily supply up here, as well as up in here. So, and really when I go to even bigger and call it the weekly, I do have this weekly area up here of resistance that could stem the tide, if you will. So I am still... I'm bullish because I use the 4 hour to make my trade decisions. Remember, we're thinking about as a trader, I'm bullish because my 4 hour tells me to be bullish, but knowing that if I get a lower low and a lower high, I'm not married to that position, right? That's what I've talked about. I don't get married to being a bull or being a bear. I want to be able to be nimble in my trading approach. So when I'm, go down to the 15-minute chart now. So this was, kind of that breakout area that I just talked about. We did get a little bit of a breakout here. With these higher lows coming into this area, And so, if you miss this thing, we may get another retest somewhere down into one of these areas. You could even go with a candle-to-candle style of trade on the 15-minute or the 1 hour if you miss the breakout and you still want to get in on it. Um, the breakout's not a full, it's not a wide open, gigantic breakout style of a trade. And heading into, we're on a Friday, remembering that on Monday most of our markets are going to be closed, and so we may not get a whole lot of movement. Right, heading into a 3-day weekend in the markets, you sometimes don't get a lot of movement on that Friday before. So not a whole lot that I want to force today, but I like the fact that we went through some of those areas on kind of a clear out period. NASDAQ, I didn't have those same areas even highlighted. None of those areas were even highlighted because the NASDAQ price was rallying in a slightly different way. Now, I actually anticipated yesterday we would get a bit more of a rollover and come down, but knowing that everything that we would look at is slightly lower probability if we're going to be a seller. My momentum to the upside was weakening, but just because it's weakening does not change my bias, right? And so if I look at the NASDAQ hasn't quite done that same breakout above the Globex highs yet. So the NASDAQ does have the ability to more of a breakout if we break above. Now we have a 15-minute level up above us in the NASDAQ, and that level, to go back and kind of find it, was way back here. I got to go all the way back here. It's this little wick over wick area, which includes this pivot high above. Technically, if you really wanted to hone in on it, let me see if I can go back more in time and get the right time frame. There we go. I want to zoom in on that level and really highlight why it was selected. So as I zoom in on that, you'll be able to see it's really just this lower wick right here with price coming back up. Now, this was the area that we had selected. This goes back a while, right? That goes back quite a while. And so really with the bias now switching to I'm a buyer, not necessarily a seller, I may want to change this level and actually encompass this whole region. This whole region might become a better opportunity. So now, as I take a look at where price is today, we're still fairly far away from that level. But looking at it on a 1-hour chart, you can see that I've got that level here, followed by a breakout just above it. Right now, why do I have a breakout just above it? Remember, my breakouts are levels that have been tested a couple of times that have shown to fail. So if you think about it like this 6,900 becomes an area that's been a fair price value area in the past. Could be a balance point, and a point where we do get a little reversal, and if we break through it, then there's plenty of room for price to run higher. So knowing that we've been to that area a few times, I've just widened it out. I've actually changed it enough that it's probably going to want to go to a confirmation style entry because we've hit it a number of times. And if we break above there, now we've got a breakout long up above that region. Now, that's still fairly far away. It's 150 points away from where we are right now, and it may not come into play today. It may be something more for tomorrow. For Monday. But when I go down to, say, the 5-minute chart, there's just not a whole lot here as far as opportunities. I'm going all the way to a 5, and I don't normally go to a 5, but the reason I went to the 5 is to show that there's just not a whole lot of buying demand areas down here where I would want to get long. These are formed at like 6 o'clock at night. I mean, you could come all the way back to here, which oftentimes you'll see those speed candles, those parabolic move style of candles will eventually get wiped back out. And so we'll see if it does come back down to try to retest any of these areas. So far it is not, but it very well still could. All right, crude oil, another one where now this one we came in to the area, got the trigger, and then it popped above before kind of coming back out. So in this one, you've got a little bit more leeway. You may have gotten triggered on the short here. You may have canceled above here. Remember, our cancel is that if it goes and pierces the level before entry, then it's no bueno. So even if you did get in, 1, 2, 3, 4, 5, 6 candlestick rule tells us, it's probably time to get out. I don't If it doesn't move after 6 candles, it's probably not going to move. It's kind of like one of my mentors once said: if she doesn't wink at you by 11, she's not winking at you at 1. Go to bed. So this is we're up in the 53 range again with crude oil. If I go to a 4-hour chart, a 4-hour chart, we are still in some sideways price action and still in between our area here. So those of you that took our iron condor, which expires today, was a January 18th iron condor. I think we set it up back in December. If you took that iron condor, you're feeling really good about it. Let me know in the comment section below if you did, because this was the range that we were getting paid for in oil. It was that wide of a range where you could collect a pretty good credit. So I'm going to take those red lines off because our iron condor is going to expire worthless today, barring a $3 move. And if you are still in it, and today's the last day, today's the day to close out of the position. Get rid of any of that, get any of those risk. If you close out the short strikes, especially, you eliminate that potential for obligations. So as far as a day trade goes for today, when I go down to a much smaller time period, the 4 hours telling me now I'm better off being a buyer than I am being a seller. And I got a little bit of noise in here that could be interesting. Time of the day is early afternoon period, and we've already kind of retested that level once, so it's slightly lower probability. We have this area down in here, or we could be setting up for a breakout. And when I look at this on a 1-hour chart, I do see a potential for a breakout that's being set up. Now, you can't take that breakout until we get above this candle's wick, but I do see a potential for a breakout above that region, especially in the fact that we're basing below it. So the fact that we're basing below it. Gold, continuing on with our washout day. And remember, to me, a washout day is not a bad thing. I want to get rid. Remember, I told you, and I think I've said this. I know I said it last night in the YouTube live session that I did. If you want to have trades, you got to have movement. Well, that movement is going to occur when levels are failing. You have to have levels that fail in order for new ones to set up. But notice we're not entering into any of these positions where the levels are failing. Taking a look at this one, and I talked about this a little bit last night. Price came in, touched it, in, touched it, in, touched it. And so this was a confirmation style entry, which means we get short when it comes halfway in. It means we get long when it comes halfway into the level, and then we buy as it comes back out. But we went right through the level. Nothing wrong with that. Matter of fact, that's a good thing because you're not entering the position. So while I didn't enter a bunch of positions, in all of these 4 markets today, it sets me up for future successes. That's really what I'm looking for. Where can I find the future trades that are going to give me the best opportunity to get in? Now, our breakdown has occurred off of this little level, and we're getting a little bit of a rally. So on the 15-minute chart, if you're so inclined, there's going to be an opportunity up here if we get the retest. Now, interestingly enough, look at this wick here. We came down, rallied back up, and then we dropped away. Rallied back up, based, dropped, the big drop away. So oftentimes you'll see these areas get retested, but I'm going to have to wrap if I want to take this as a level, I could take this whole area, which would encompass this whole lower wick of this candlestick. All right, so it's not a big level, but it is an opportunity up above here to get short if we get a return back up into this level. Now, I actually, because of that lower wick, I actually do like these levels up here a bit better. I'm just not so sure we're going to get to those. Right, this level up here I like a bit better. And sometimes what I'll see is that price will blow through. Will blow through that first level. Drawing one too many lines. We'll get through that first level because it's more obvious. And sometimes those more obvious levels are the ones that get blown through, and then it reverses just above at less obvious levels. And that's what I'm going to highlight on this one. This is a little bit less of an obvious area. We've got a little bit of basing in here, a little bit in there. Then we got the move down, a rally back up. If I looked at that on a smaller time period chart, call it a 5-minute chart, you can see we move down, we come back up in this wick. So then the next time, this could be conceivably a retest of this area here to the left. And so I'm wrapping my lines more around the European market open, which is where we dropped down and haven't come back into yet. All right, looking at our bonds and currency markets. So once again, continuing on that theme of a shakeout, if you will, we came down into the level. Now the ZN level did trigger on here, right? Price came out. How many candlesticks did we have? We had a lot of sideways candlesticks where price basically went nowhere. And when we have 6 candlesticks where price basically goes nowhere, that shows me that position is not going to work, which is exactly what happened. So this should not be a trade that you take the full stop loss on if you're following your trading rules. Price breaks down out of here after those 6 candlesticks. Those 6 candlesticks become, really a pretty strong trading rule of mine. If it hasn't made its move in 6 candles on my entry time frame, it's probably not going to make its move, and I probably want to change my strategy. So when I go to the 4-hour chart, now my 4-hour, whereas for a long time it was telling me to be a buyer, is now clearly telling me to be a seller. We put in kind of a head and shoulders pattern up here, and there's still room for price, I think, to continue to fall. So now I would look for a reversal trade up above current price. Somewhere in one of these regions. Now, I say a reversal trade knowing that I may not get one. I may be better off playing for that breakout. If we do get a reversal trade, this area up here would be the level to kind of look for today. Now, inside of the Aussie. So the Aussie dollar, unfortunately, I had a setup on this one where we had the short. We came down. We hit the breakout. Our breakout short then was working pretty well. And then, we got a decent little move on the breakout short. And then it came back and then just completely blew right through. So the Aussie dollar still chopping essentially sideways. But if you took that area down here, that was where we had moved our stop down to on the last one, gave it another bite at the apple, and then it just kind of came back through. So not a whole lot of movement in there. Our better opportunity is still down in here. In the euro, for those of you that took the euro breakout earlier this week, if you're still in that euro breakout, you've been handsomely rewarded. This trade should be your whole week, right? This trade should have been your whole week. And we talked about taking the stop, moving it down to here. If you took the stop and moved it down to here, you're doing great. You could have also added a position somewhere right in this region just above. Canadian dollar. So I looked at the Canadian dollar yesterday in the YouTube live session, and we came to the decision that I don't want to force a trade. That's really the decision that we came to, because we're still chopping along basically sideways, not a whole lot of direction that's being formed, and so I'm going to hold off really on anything in the Canadian dollar. Great British Pound. We are into our overhead supply in the Great British Pound. However, what are we seeing in that Great British Pound level? Well, we're seeing that we came into the level and then we're just not getting a whole lot of movement out of that zone. So if you're still short, take your stop, move it to break even. You probably should be out based on the 6 candlestick rule, as we have not gotten much movement out of that level. So I need to remove that level and look ahead to where kind of my next opportunity would be. And when I go to the 4-hour, my 4 hours telling me I'm better off being a buyer, no question about it, than I am being a seller. So I would need to find, remember, anytime that the big picture tells me to be a buyer and I choose to be a seller, I take lower probability, right? So as it stands right now, I don't have a lot of great demand here that I would want to try to get long, but we could do more of a candle-to-candle reversal style of trade. Japanese yen. So this Japanese yen level, unfortunately, this one broke through. There's no question this one was a stop out. We came to the level, thought we were going to get the entry, and then it petered out out of that level, which set up for a decent breakout. And now, by the way, why would that fail? Well, that would fail because of all the basing that we had above the level. That would be the reason why that level would fail. And so now there's room for it to kind of continue to move down. I think even if you get below here, you can kind of add to a short position from that zone. All right. Whew. Covered a lot of stuff today. If you've got any questions, please send me an email, support@tradersarmy.com. We will not have a daily market commentary on Monday, as the markets won't be. The U.S. equity markets are going to be closed on Monday. Futures markets will be very limited, so we will take no DMC on Monday, but we will be back bright and early Tuesday morning. Hope you guys have a great weekend, and I